Hello, you guys. We are back. It is 6:26. I am pumped because the markets have been moving beautifully the past 2 days. We've had some great trades. And I think I'm really excited to show you guys today's breakdown because what I want to do and what we're going to go over on the 26th is basically I want to go over the strategies and show you different assets that show these examples. And then basically show you how you could have been playing the market yourself using just these simple examples that are not too difficult to follow through, follow the path. It's very, very, very easy and consistent. So let's start right off with the bubbles. We'll do the liquidation heat map and then we'll go over some of these strategies. And if I get in a tangent on one of them, please don't hesitate, stop me. But I just want to show you guys how easy it is to set up a strategy, how easy it is to back test a strategy. All of this is doable. Okay, so for the bubbles, not much movement. Yesterday was kind of a slow day if you look at it in a very, very, very small time frame. I mean, like, look from yesterday. Now we want this channel, this one right here. All right, so this is when we drew our last line, right? No, that's not true. Here it is. There we go. This is when we drew it, right? This is when we had these liquidation points. So you could have easily seen how literally the chart just followed through with it. Look at this. Hovered into it, but then it stopped at the liquidation line. That was like the top, which is what helped me create that position, right? And I'm going to walk you through how I set that up and what my time frame was in regard. And it's still not closed, right? Like we still have to see if it's going to make it to the take profit or the stop loss. The good thing about where it is now is you could easily then lower the risk, right? If it just breaks above you, it is what it is. It isn't something you just want to keep playing out. Because if it does all of this like consolidation here, like it did, right? Because I actually think we entered it here, but like it did all this consolidation and then it had a bounce back up here, and I think at least twice. So at the end of the day, this might have been the new support. So realistically, getting out even at break even doesn't burn, doesn't cost extra money. And what I really, really will would recommend is probably moving this down to give yourself even just a small profit, something like this, right? Because if you do that every time, then you're removing risk off the table immediately. And this is just because of when we drew these liquidation points, just to show you how valuable they are and why you do want to try to update them every day. That's why I like doing the lives, because I update them on the lives and then I'll use them to trade the whole day. So in this case, what we do have, we are at 108, but that's only 16 million. I still think maybe we should start it from there. 108.4, because the next one's 14 million. The next one's even less, and so is the third one. So we should definitely start it from there, and it'd be about 108 to 108.4. Yeah, so same point. That's why it's so strong, which is honestly hilarious, right? And then we break above, and that goes all the way up to 109.5. So we have a lot of resistance here, right? The bears have a lot of liquidity just sitting there. And then on the bottom, we've got some here at the 106.52, then the 106.28, 106.756. Hell, I think we should even do the 106.9 all the way down to 106.3. If you really want to be safe, we could do 106.9 to 106.0, because it looks like there's a lot heavier liquidity there. And then in this case right now, we don't actually need this one. So we have both liquidity lines, which is ironic. That's exactly what the trade position is set in. And how I did this one, right? How I did this one was basically using the liquidity lines. There was three things, right? First part of the confluence was on a larger time frame, because what I'm basically testing here is a longer swing trade. It could have been closed out in a day position. Actually, I want to show you guys what the stop loss was before I move. Oh no, that sucks. Okay, I had the stop loss above the channel. Damn. There we go. I had the stop loss above the channel, right? Because earlier that liquidation point was bigger, so I didn't use that full amount. I just used the channel as my stopping point. So with the channel sitting there, the stop position was under 0.30%, 0.35%, you could even say. And why that's beneficial is because that's enough of a stopping position where if it does break through that, I want out. I don't want to take the risk anymore. I don't want to risk any more money on it. That's just not worth it. But if it doesn't, for example, like it perfectly did, the rest is riding the wave. And this was going to be a 500x leverage, but I think I only did 250. So 250x on $100 margin, right? And the math is simple. We take the 100 times the 250. So we're at a $25,000 position. And the move on it is small. So it's only 1.6% is what we're expecting. But how you calculate the profit, even on the margin, is by then multiplying it by the percentage gained, which is the 1.6. So you're looking at around 400 if we get to the bottom and it closes out down here, right? And that's how simple a trade like this is. And how you could play with it, you guys, is raise the margin, right? You could say, well, I'm willing to risk, 250 bucks, right? $250 in this exact play would have been 250 times the 100. No, sorry, times the 250. So it would have been 62,500. And you guys notice too how the multiplication adds on to the position, right? So 62,000 or 62,500 times the same 0.016. That's $1,000. So at risking 100, we only make 400 at hitting profit. If we risk 250, we make 1,000, and the number spirals, right? And the easiest, just to give you the answer, you just multiply it by 4, right? Right, because it's just the 1.6% of whatever position at the 250 is going to just be multiplied by 4. So if we risk $500, we would have gained $2,000 in that strategy, right? Hell, if we risked $1,000, we would have gained $4,000 in the strategy, and it hasn't hit it yet. So we still have to wait. It could totally just go back up, break even, or if I do set the stop loss, which is still what I would recommend, right? Like maybe a little bit above it, just giving it some wiggle room. With that, you're still looking at 0.16. Margin's only 250. Sorry, margin's only 100. So it's not going to be much. I'll like pay for the fees, right? But I like to calculate if I would have done it bigger, right? So 250 times 250, still same thing, 62,500. And this time we're going to add an extra zero. The profit's still $100 from this simple little trade at that high margin. But when you're high at that higher margin and higher leverage, but when you're doing that, your stop loss has to be extremely tight. So I was trying to explain this to somebody yesterday, and they don't seem to understand like the difference between, like they don't understand what the leverage multiple amplifies, because he's like, well, I don't get it. If you can make all this money in a percent move, is how does that good for them? I'm like, well, they take the risk on the other end, and all these exchanges use like these big market makers. Like Binance is the biggest liquidity provider, you guys, for like 90% of these exchanges. So with that case, they don't give it, like they want you to win. That what they really care about, what all exchanges care about, is trading volume or the trading fees, right? Because these trading fees, every time I'm taking a trade, whether I win or I lose, right, I am paying a fee, right? So like if you consider just yesterday alone, these were the trades. We paid 19 plus 19 plus 20. We paid $88 in just trading fees in these positions. Forget about the losses, because yesterday we had some losses on the trades, right? But that's, they get expensive. Even these, right? Some of these wins were really, really big, though. This was the perfect strategy, right? This is the one that I know works, right? And I am testing the swings thing, but I know this one works now. Now I've confirmed 3 out of the 5 strategies that like we've organized are working, and they're very, very, very consistent. Now there is market sentiment changes, which is why I kind of want to go over that here in a sec, and I'll walk you guys through what we see in the like. Look at how many charts we have, right? And they're all the same asset class, right? So we're still playing in crypto. The 4 on here, we've got Bitcoin, Ethereum, Solana, and XRP, right? So we're still playing in crypto. But the cool part is all of the charts moved in different patterns. So you could have seen so many different ways to capitalize on all of them. Realistically, Ethereum and BTC kind of shared the same retriment. So like, look at this. Let's actually do 15, right? They kind of followed the same exact look. And if you look at the bigger end of it, they all kind of do. A little differently though, because like look at this. In BTC from here, that was the bottom for all of them. Let's put Solana in the mix. Okay, so this was the bottom for all of them. This is what led the charge. So we can see that when the trend changes in Bitcoin, the trend is going to change in all of them. And the general big size pattern on Bitcoin matches a majority of the altcoins and not necessarily meme coins. So let's just say altcoins. But we can see moving from here to the next low is exactly what they all did. You can see the same exact pattern, right? Their percentages might have all been a lot more different. So like on BTC from that low to the high before the trend change was 4%. Well, there we go. So it's from here to here. On Ethereum was 9% and it was 18 hours where BTC's was 16 hours, right? Let's do it again. Solana. And the trick to this is we want to get so like same time frame. So BTC's was here. So this is the long. Wow. Solana only had a 9% on that bad boy, right? And then from here, right? Same exact spot. Yes. I want to go to the top for them all. So XRP's was here. Yeah, like look at that. So let's look at the time frame, right? They all lagged. What's some commonalities we can see? Let me ask it that way. One, they all lag behind Bitcoin, right? They all lag behind Bitcoin. They followed Bitcoin's plan, right? So in this case, it went up by 4.31% and it took 17 hours roughly. The real number is 16.45, but like, we're in 15, so I could have been one off. So let's just assume 17 hours, right? Then you go to these and you've got 17 hours and 30 minutes or so. So even like if we give it a 15 plus or minus, because again, we're on the 15-minute time frame, then we can just safe to assume within 5 to 10 minutes, these all assets follow the same exact pattern as BTC. But then when you get into the smaller time frames, you can see that they ended up shifting. And it also changed in XRP and Solana. Like for example, right? So let's start moving into here. Right, we want this piece of BTC. So from here to here, BTC did in a sense consolidate, right? But this was the cleanest consolidation that we saw, and we saw that on XRP, right? And this one, the consolidation was a lot more choppy. The strategy here that would have been best would have been the fib retracement strategy, where the strategy here that was best was basically just the consolidation strategy. Guys, let's look at this. From here to here, right? This is basically when BTC stopped the run up. No, that's not even true. That's hilarious. Okay, so in BTC here is when Ripple entered its consolidation phase. And the reason this is important is because you could have played Ripple like the flute, right? So from here, it started, and in Ripple's case, it still went on till here. So I do want to add a vertical line and show this. There. So Ripple's like, when I'm saying Ripple's consolidation, you guys, I'm talking about the fact that it just made this parallel channel, specifically this parallel channel. And how this parallel channel is drawn is you find the first tap, you get to the second tap, and then it's confirmed. And that's what you just follow through with. You just stick to it. Don't overthink it. Don't try to add on any extra features or ideas that always messes it up. Trading is simplified and patterns can be found and can be replicated consistently. It's just finding those patterns, right? And also back testing your strategy to those patterns. So let me continue. So we've got the two tops here. And then for the bottoms, we had two bottoms right away. The first bottom technically created a top and the second bottom. And how this is drawn is this would have been drawn from the first two or three tap points that you receive. So we do have a big window here. But again, assets don't move in specific lines, they move in areas. So that's okay, as long as that big window isn't 1-2%, because that messes up your margin percentage, or sorry, your leverage percentage that you can use, right? Because if this is a big window, you want to use way lower leverage. You cannot control it. It's just too risky. But if this is a tighter number, you can use higher leverage. And once Ripple broke above here, right, and it created this as the new high, then actually this would have been the new one, and you could have just stuck to that. That still would have worked flawlessly throughout the entire thing. The biggest negative here is the 0.72. So if you do everything at 100x, then you have a whole percentage. And a percentage from here to here is all the way up to here, right? But now let's think about the profit. We know that the bottom of this channel hit here no matter what, because these are the 2 touch points, right? And look, it technically did it again, and it did it again, and it kind of did it again. So like these were all touch points. If you were still bullish on the asset, you could have just bought a little bit harder on the bottoms, but you could, if you wanted to take more risk, move it up. Because again, your biggest stop point is about 0.39%, which is way under 1%, right? So in this example here, right, you could do the short from here to here. Sorry, what I was saying was you also need to calculate the total take profit opportunity window, right? Because you're assuming it's going to get back to the bottom end of the channel. And this channel did cross all of this. So in your first assumption here, you might have assumed it maybe just here, right? And it would not have hit that, but your trailing stop loss is what would have been hit out, right? Because that's your backup to always at least taking in the biggest profit you can on it. And 1.6% to a 1% stop loss window that you're immediately going to remove if it moves your way is a very, very good R&R, because the higher, even as you trade more and trade more, right? Even if you're taking these 1% losses, you should never be taking a 1% if you're following such a tight strategy like this. This is like my favorite scalping consolidation strategy. And what I'm just trying to show here with it is realistically here, like, look at this time to this time, Ripple had that pattern, right? This was just a free boom, boom, boom. Like if we want to just say the rule is very, very simple. You have 2 biases. You can either decide to be a short bias or a long bias. In this case, let's just assume you're a short bias, right? You're like, no, I think the market's gone too much up. But we had drawn this. We do it here. And I want to lower the time frame. I just want to show you guys a quick replay and just to us to like be able to calculate what it would have been, right? So the rule is simple. Every time it taps the line, we short. Every time it gets close to or taps this line, we long, right? And we can leave early. And if it lets me move the stop loss quick, we'll just do that as well, right? So we're playing it out. Nope, didn't tap it. You know, now I could be riskier and lower this a bit because that has way more touch points, right? So it's tapping the bottom. You could have bought, but in our strategy, we're focusing for shorts, right? So even if we just buy here and wait, we'll do it. We'll do a buy, but this should be a short play. I want to show then how we'll set up the stop loss. It's roughly the 1% if you can. Yep, that's close enough. And then the take profit, it's just the top. We don't need to chase it. We don't want, oh, we could run. We don't care. I don't care if it magically gets a 10% up candle and feel bad that I lost that in the win. I don't care, right? Play it, wait for it. And when it hits that top of the channel, our goal is to short it. All right, so we're back to the top of the channel. Damn, it already started. Yeah. Okay, sell, same exact concept. Stop loss, roughly 1%. I have to lower it a bit just because of that. And then take profit down here, right? And you just play it. See, it even got close to the stop loss. We just don't take, we don't move it. We don't get scared because again, you're just following a simple strategy. You're not trying to make changes to the plan. You're just playing the plan. All right, now we're getting close to here. So you can close early. Actually, can I do? Oh, yes, I can. Damn, I should have been doing that. Okay, well, I hit that other one. Remember, we could have bought here because now we're at the bottom of the channel, but we're not going to take that risk. We're going to wait for it to hit the top again, and we're going to short. Very simple strategy. There's like nothing in between. You're just following a consolidation, and you don't know if the asset's going to stay in this consolidation, but it's already done it, so you're just hoping it continues. And the real hope I got to short. The real hope is that it does it for days, right? The bigger window you get, the more money you can make from it. And hell, like in this one, since it's moving really fast, I can do this. And this isn't changing the plan. This is just being greedy and trying to get more, right? I can do this and trail my stop loss, right? Move my take profit and press play. All right. Now we wait. Can hit my thing because it's in the zone. It is very just like that. It did, right? And we hit the top again. So we can sell a little bit late. I missed a little bit of the party. The only reason I'm willing to move my take profit so long is because I want to trail it, and playing it on this just makes it so hard to like be able to catch it because it just plays it so fast, right? And this is a scalp strategy. Oh, that was close. Did it again. Hell yeah. Right? Play it. Give it the window. And you know what? See, it sucks. I could have sold up here, but I didn't. I missed that little bit of an entry, and it's not that big of a deal, right? It's been a whole 2 days and 1 hour on this, and now we already know it's gonna break, obviously, you guys. But I just want to show. So like following through with the simplistic strategy, and then just benefiting from some of these big moves, you can now just trail through, right? You just trail through, just like this, right? Now we have another. We can go. All right, if it retaps it, see, because it is likely to retap. You don't always want to take that risk, so we'll keep it here and wait and just see how far this makes it. Because hopefully this thing does this whole retracement. Okay, so this is where it stopped, but we would be riding that all the way from here, which is a 4% in 14 hours. At again, 100x leverage with $100 in margin only, that's a $10,000 position. $10,000 position times 4% is going to be 4.78. So you'd make $478. The fees on that position there would have been about 30 bucks. So this would have been a $400 play. Okay, let's do this. I just want to show you guys how it is supposed to be when you're trading, and like why we kind of screw ourselves by just making it difficult and adding so many like it's okay to know multiple strategies, but you can only use one at a time. You can use multiple strategies to find which pattern is in, and then from there on you pick one, and that's the reason you're entry. You don't pick a strategy because here's the thing, they all go against each other. Right? A lot of strategies do, right? Like this one will tell you this is the best time to buy and this is why, but then this one says, well, actually, no, it's not. You don't want to do that. You want to just stick to one. And if you're going to use multiples, fine, but then list that off and you're like journaling in your notes. So this strategy here, we would be up this how much, or for that trade. Our other trade was, I think we took this one. I think we caught this one. I think it was this one, and we caught it like right here. And it was like, I think we got out a little early on the break back. Yep, like that. All right, I just want to show you guys how easy this is. So we took 3 trades in this strategy example, right? Was there any ones that we would have missed? Yeah, we could have taken this long, but again, that doesn't matter. In this, where we're literally looking for is this to happen, right? So that's why we picked one bias, right? We could have been wrong. Instead of going short, it could have just broken out. And now we know we wait for the next pattern to emerge and then go from there. That's what it means to be patient in trading. So the whole pattern roughly took about 2 days and 10 hours, right? And it took roughly 17 hours where I felt comfortable for it. So in totality, to make this money, it took about 2 days and 13 hours. So 2 days and a half, right? So now let's use GPT to our advantage and let's give scenarios for the margins that we're going to open. Okay. First one was 1.53. Second one, I think, was like 1.21. Yep, 1.23 and 4.70. And you do not have to use 500x. I'm just showing you in my small, light scalping strategy how I do it. I always think you should use less leverage if you're not comfortable with leverage, because you will see losses. Like you will like it yesterday, right? Changing up a little bit on the strategy, 447, 335, right? And that's what happens with leverage. But the wins are also just as freaking big, right? Like this was $50 in margin to make the 253. These just hit my stop loss, right? And I was trying to do a bigger window. So the answer to what we would have made on all three of them is let's just do this one. Lowest possibility, right? $100 per trade. And I took 3 trades. Let's assume all of them failed. With, let's see if it just gets it. We know the profit. Let's get the stop losses, or let's get the loss. That is perfect. Okay. So on all, this is going to be easier. Way less work than scrolling up and down. Oh, don't make it a whole damn code. No. Okay, this works right here. So 100 in margin for 250x. If you would have won all 3 trades, which we did in our example, we would have made 1,865, and that's 3 trades. The whole risk on the account that you needed for all 3 trades was 900. That adds up if every one of them just lost, like we fumbled the bag on putting this in the right spot. Like it is what it is, right? That's normal. So let's assume that that was the case in all 3. We would have only lost 900, but because we won all 3, we made 1865, right? Now let's just move it up to $200. Your total loss is 1800. So you risk basically $1800 in 2 days and 18 hours, or 2 days and a half. So 2 days and, yeah, I think 2 days and a half, right? So that's still $3,730 in wins. And that's 200 in margin, 250x. Now, if you wanted to take the same risk with just $100 in position, it's still the same loss. So I guess that one doesn't help us. But the 200 times 500x, look at that. Your loss is big. So you needed a 4K account to take this risk, but the gain is $7,460. So you guys, basically, you needed an account with if you wanted the biggest number, you needed an account with $4,000 to take those specific trades. And the rules were simple. We're drawing the support resistance, and we're following through from top to bottom. Like in this example, if we just stuck to what we were doing, again, we would have caught this one, right? 1%, take profit, 1.55%, right? Technically, we would have caught the second touch too, because the play on this is you assume that you also do it immediately on the second tap. That second tap is confirmation. Once you get confirmation on it, not always. So actually, I'm not going to put that in here. So again, we just had one more trade. Let's get the final number here. Sorry, you guys. I know I got to go. I just really want to show how simple it is to follow through with this strategy. Just doing, yep, 2 days and 11 hours. So it's even less. 2 days and 11 hours. And give me the final number. There it is. Okay. On the 100, 250x margin, you need an account with $1,500. And you would have made $2,247 in 2 days and a half. That's people's salaries in a month done in a day or 2 days. And if you can do that 2 times a month, that covers your full salary. That's why trading's a great side gig there. And then look again, for the 200 times 500x, you risked 5K. So you needed a 5K account, but you would have made $8,990. So that's the power of trading and using simple strategies. We didn't get to go through all of them today, but I'm really glad we did this one. Thank you guys so much for watching. I will see you tomorrow. Thanks, everybody. Bye. Good luck trading. Stay trading.